The impact of the corona pandemic crisis does not only affect our health, but also our economic state. If you're watching this video, I'm quite sure that you're also curious about how to build wealth in this great reset. Number 4. Business. There are upwards of 580 million entrepreneurs in the world, and a hefty 62% of adults believe that entrepreneurship is an ideal career, if not a dream come true. Meanwhile, the benefits of being an entrepreneur are steadily climbing. But when you consider it, this type of information is virtually common sense, as all we have to do is look at the wealthiest folks on our planet. Jeff Bezos, founder and executive of Amazon. Elon Musk, founder, CEO, and chief engineer of SpaceX and CEO of Tesla Incorporated. And Mark Zuckerberg, CEO of Facebook, all opted to start their own business. Some of them were actually high school or college dropouts, or decided to quit their jobs with a decent salary to focus and take the risks that come with entrepreneurship. Less competition. Because of the current COVID-19 pandemic, many companies that started 2020 on a good note have shut down. Others that managed to stay afloat are constantly in the strategizing mode. This current climate leaves a huge gap in the market, so there are many opportunities for startups to thrive. Although 2021 doesn't seem like the ideal year to get your startup running, there is ultimately less competition now. Perhaps you should strike while the iron is hot. Access to consumers. Since the beginning of 2020, e-commerce has shot up by nearly 40%. More than ever before, consumers are desperate without their devices, and online consumption is at an all-time high. Following trends in consumer behavior and purchasing habits indicate that if your business can go online in 2021 and focus on solutions to consumer problems, it'll be in fortunate circumstances to reach its target demographic. The talent you like. Proper planning with the right strategy is key to success, so you'll have to consider your crew, employees, or talents. Since the global quarantine, lockdowns caused mass unemployment, and there's a larger pool of talent to recruit. Thus, there are a lot of experienced individuals who are perfect assets in the development of your business. Number 3. Paper assets. Investments like stock, currencies, bonds, money market accounts, mutual funds, and insurance plans are called paper assets. Paper assets refer to assets that are representations of something. If you're looking for a scheme to grow your wealth effortlessly and aim to avoid labor and stress, as well as take minimal risks to lose your capital, paper assets are the solution. Paper assets equal passive income. It's the ideal asset, especially for those who have a lot on their plate, like caring for children or any other very demanding job. Depending on the amount of capital you invest, paper assets will provide a moderate and steady income. If you consider Warren Buffett one of the richest people in the world, you'll learn or realize that he earned all of his wealth by betting on long-term paper assets and companies, with a perspective of indelible durations. So if you opt for this long-term venture, start with a commitment of at least 3 to 5 years. However, the strongest players of the stock market typically opt for the 10 to 20-year scheme. Number 2. Commodities. What would we ever do without commodities? They include metals. We love to style our gold and silver, and copper is something we desperately need for the electricity consumption. Food, of course, is a vital commodity, as well as raw materials like oil, gas, cotton, etc. Without a doubt, commodities are generally capital gains or loss type investments, and you can buy future contracts of any commodity through the future exchanges. If you're a new investor, advice will be given to you to start small and build your financial education. Experience is always a great teacher as well, so go ahead and invest in a simple silver coin and then watch its value increase or decrease in your daily news to enhance your financial IQ. Even though economies have taken major hits induced by COVID-19 and all its variants, the commodities market is still extremely appealing for investors. Investors in all the 195 countries around the world have been forced to rethink their approach to the New World global reset. Nonetheless, the commodity market of 2020 wasn't hit with profound impacts. In August, gold topped $2,000 an ounce for the first time ever, increasing by 16.8% in US dollar. Then low interest rates made the precious metal a more appealing haven than treasuries, even outperforming many prominent asset classes in the process, unsurprisingly to many global trend followers. Keep in mind that gold can act as an insurance policy against monetary devaluation, especially if or when the dollar weakens. Dollar weakness has traditionally led to gold price rising, and with a globally led devaluation of fiat currencies, more so than ever, we anticipate higher gold prices. The incoming commodity supercycle. A commodity supercycle is the term given to the even when a range of base material prices continue to hover long-standing monetary trend lines for extended periods. These supercycles can sometimes last for decades. Two prime examples of this include the 19th century industrialization of the United States and the post-war construction of Europe and Japan in the 1950s. Analysts for Goldman Sachs and BlackRock are the latest to point to indicators that there might surely be a commodity supercycle on the horizon, with copper topping the $8,000 per ton price point in over 7 years, as well as another virus relief package estimated to be worth $900 billion. Higher commodity prices naturally lead to higher levels of observed inflation through traditional indicators like CPI. These experts claim that the pandemic itself is a structural catalyst for a commodity supercycle. In addition to a weaker dollar and the accompanying boost for commodities, the pandemic may have the effect of synchronizing activities across some of the world's biggest economies. Although countries like Japan, India, Australia, and the US during the Trump administration have been trying to avoid dependency on China due to China's relative success in containing the spread of the pandemic, investor optimism regarding the growth of markets across the board in 2021 have increased, and now the vaccines are being rolled out globally. Commodities have been gaining traction, especially in iron, ore, and oil. Precious metals such as gold and silver hitting multi-year highs, as well as crude oil reaching a price point of $50 per barrel, and other indicators that another supercycle is imminent. Not only that, but the dollar's ever-weakening value coupled with the rise of global liquidity may also result in a major commodity spike for 2021. Number 1. Real estate. Real estate is an asset that could be a good investment for some and a bad investment for others. It all depends on your goals. The risk, after all, is in the investor, not the investment. So before investing in real estate, ask yourself, what are your goals? Remember that real estate assets are more active than many people realize. It may seem like the responsibilities are minimum, and real estate can be an easy way to make passive income, but that is often not the case. There might be more work required than the investor signed up for. The cause and effect of COVID on real estate. The pandemic has changed real estate fundamental forever. In the past, many long-term investors focused on investing in areas with strong employment. Recent thinking went like this: strong employment attracts people, more people equals higher rents, and higher rents result in higher property values. But we do live in the age of information. So even before the pandemic, we saw a steady shift in the workplace toward remote or virtual work. The pandemic accelerated this transition for both employers and employees. The rapid growth of remote work has expanded the options for savvy real estate investors, as employees move away from urban centers and opt for less crowded, more affordable rental markets. Employees who used to commute daily to their office often choose to live within a reasonable distance from their place of employment. Now, however, those same employees may never visit their office in 2021, or they may be required to show their face only a few times a month. Location independence has arrived, and remote workers can live hours or even states away from their place of business. A 2020 survey by PricewaterhouseCoopers, PwC, found that 24% of executives expect that great portions of their workforce will remain remote after the pandemic, if it ever actually does have an ending. However, this phenomenon is one of the main causes of the exploding real estate prices in the suburbs. In fact, moving companies in Brooklyn, New York, can't keep up. One company even reported a 200% increase in requests for quotes for out-of-state movers over the previous year. Californians have also engaged in the same great exodus. The real estate industry will survive. The great thing about owning land is that despite a short-term recession, house values and rents will continue to rise. While we will see some inventory increases due to some homeowners being forced to sell, the inventory will be absorbed quickly, and experts foresee that the U.S. will soon return to a highly competitive housing market. COVID has created a unique but brief opportunity for you and your clients to new markets and purchase underpriced real estate this year. Hopefully, you could use these reasons outlined here to convince your clients to invest in real estate crisis into an opportunity. Now is a great time to sharpen your skills and prepare yourself and your clients for the opportunities ahead. And there you have it, the 4 assets that will give you prosperity and beyond. Regardless of what kind of assets you will start embarking on, the decision is yours.